While the logistics are done, team, this is not an AI topic. So this is a topic on getting back to lending, getting back to unsecured credit. Right? The topic is a very interesting one. Unsecured credit, expanding access, managing access, as well as looking at being compliant. So of course, we'll definitely try to bring in AI, but you can use your phones for 2 minutes to take photographs, number one. Second one is to get your friends into the room. Because of the fact that we have lined up very interesting conversation, I couldn't resist that we have one of the best panel, I would say. We have Amit, Pathak, who heads unsecured loan business for Kotak Bank. So we will have a very great perspective from a large bank, number one. Second one is we have Hari to my right. Hari is co-founder of OneCard, an end-to-end credit card processing company. How unsecured loans and credit card business pans out. We can talk about all about the credit card penetration and things like that. To my left is Prodigy Finance. She could be a prodigy as well. Right? Sonal Kapoor, it's a UK-based company spanning across education loans, and she's the Chief Commercial Officer of the Global Business Officer for that organization. We would love to hear from her a perspective of managing credit in education business. We have our showstopper, Mr. SatyaNarayana Pathuri. We also have defined a showstopper in our panel. He's CEO of Margadarsi Chit Fund. Disclaimer, you would love the conversation with him today, right? And of course, to add it all, we have the bureau with us, represented by Ram, who manages the Easy Head of Sales with CRIF. So we will have bureau watching over our conversation and adding their perspective today, right? So that's the stellar panel we have today. So for next 45 minutes, call your friends. We're going to have some very, very interesting conversation. So with that, let's get started. Let's start with unsecured credit growth in the country. Right? We are roughly about 25.3% of overall credit by RBI, right? Unsecured stands at about 25.3% overall. Although our NPAs have gone down from 2.5% to 2.3% today, RBI is very cautious about it, about managing unsecured growth. Caution is inherently there within our DNA, but the fact is there are pockets of areas where RBI is taking action. I'm very happy that RBI has taken action on all of those digital arrests. You're getting those messages nowadays, right? So in terms of the same unsecured growth, they might be finding some patterns with which they're exercising some caution, right? So that's where we get into picture of, is it an opportunity? Is it a threat? Is it something that's going to cause issue and slowdown? Already there is a bit of a slowdown. Many organizations are looking at how do I lend to my known customers or existing to bank customers or the bottom of the funnel. That is what organizations are thinking today. So let's go across and look at sharing this perspective, probably to start with Amit from Kotak on his thoughts about how Kotak is seeing this, what is their portfolio, how's the unsecured growth perspective in the market. Maybe we start with the large bank.
Thanks, Sridhar. From the Kotak point of view, if you have to look at, and all of us know, last 3 years, obviously, or prior to this year, the last 3 years, the growth of the unsecured business was really fantastic, especially post-COVID. And if we really compare, even say the last 2 years, say August 22 to August 24, if I have to spell out of the 78 lakh crore kind of a business over there, the secured business like HL, LAP and even auto loan, they used to contribute close to around 51% on 78 lakh. In say August 24, 2 years later, on a higher base of 120 lakh crore and all, that contribution has come down from 51 to 46. So what it means, the derived is that the growth of the other loans, which essentially are the unsecured loans, has gone up substantially. Obviously, as at Kotak also, we had a great run in unsecured space. But as in last January, December onwards, we started sensing some kind of a more risk in the market and all. Obviously, we bit slowed down on that piece of it. But slowed down on the NTB. But as you rightly said, our focus on the ETB, Kotak ETB customers has been, we have tremendously increased the focus on that. And though our business has grown back close to around 15 to 20% on a year-on-year basis, my ETB contribution has grown substantially in that space because the risk is pretty known. The share of NTC, as you would know, for the entire private sector bank put together, August 22 it was 10%. Now for all private sector bank it has come down to 4%. So obviously the banks have become cautious about it. But at the same time, we know there's a huge opportunity over there. There are good set of people who are actually wanting the credit of it. They are ready to pay a reasonable price for it. Obviously there's a large market to tap. So that has been the principle. Also, last 2 and 3 years, as an organization, we invested very, very heavily on the machine learning, AI. The discussions are on these 2 days and all, but we invested pretty heavily. Also, we invested very heavily on the doing some kind of experiments and pilots, identifying segments, lend it to them, learn from those experiments or pilots and all that, and then subsequently incorporate those learnings into our further lending programs and all. That is yielding great results, I must say so. So that has been the experience of Kotak last 2.5 years.
Thank you. So the caution is in the air on the unsecured credit growth, right? Now let's look at hearing from CRIF, who's my friend Ram, who's looking at this across the industry and seeing what kind of innovation people are doing to look at managing growth. All of us have targets, managing growth, as well as growing the unsecured kind of a business. Any interesting thoughts, Ram, on how industry is grappling with this? What kind of innovative areas organizations are coming up with from your perspective?
Thank you, Sridhar, and I'm going to enjoy the discussion of the panelists today. And those of you who are wondering, I'm the same guy with the beard. Right? If I look at the last 2-3 years trajectory, 2022-23 was a very, very robust year for growth for unsecured, right? So we've seen the post-COVID driven spending that we spoke about. It was an unprecedented growth, and the last 2 years it's tapering down, especially H2 of 2024 and then H1 of 2025, we see it tapering down. So on the personal loan space alone, if you look at it, roughly it's a 13 lakh crore book, 13.5 lakh crore book. But the growth rate is reduced to half. So it's 14% growth rate on the portfolio year on year, which was 30% last year. So what is happening is definitely lenders are becoming more cautious in terms of how do we choose the right customer to lend. So it has definitely come down. And having said which, 80% of the loans that are given are below 10,000 loans in terms of number of loans. And that is seeing a significant growth despite RBI coming in intervening. So the question here is, do we change our lens in terms of underwriting? I think a lot of lenders are doing it, right? They depending not only on the data from the bureau and the credit score, but their own application score, behavioral scorecards. They're looking at really making it work in a manner they want. Added to this is the expansion of the rural credit, right? We used to have a heavy concentration on the top 8 cities. Now that is changing right now. So in 2025 H1, if you look at it, 40% of the unsecured credit has gone to cities beyond the top 100 cities. So that's a complete change in terms of the dynamics on whom you're lending, the persona of the customer, the geography, and adds complexity to collections as well, right, as you go to deeper geographies. So with all this model governance, changing of the models, looking at recalibrating their application scorecards, that's from the lender side which is happening. And from the bureau side, what we have realized is probably a generic bureau score is not sufficient enough to be able to predict unsecured risk, right? So as a generic bureau score, it tells me what is the risk in funding me as a borrower for any of the loans that I'm taking, right? So from the bureau side, what we have done is we have come out with product-specific indexes, right? So if a lender wants to lend a credit card, we can tell you what is the risk in lending to this particular credit card, irrespective of whether the customer is going to be behaving well outside or not on the other loans. A similar thing with the unsecured that we have come up with. And it also predicts, now in an unsecured, if I'm going to tell you what is the probability of a 90 plus in the next 12 months, maybe it's a wee bit low, late by the time I'm telling you, right? So people are looking at, can I predict the default probability much earlier in the journey? So the new indexes that we have come up with tells you within 30 days, what is the probability that he'll default? And within 60 days, what is the probability he'll default? So that the action of recovery or recourse that they can do can be much earlier. So this is some of the innovations, some of the many that's happening that I would say.
I'm sure Kotak must also be borrowing some ideas and doing some pilots with you.
Absolutely.
Right? So perfect. So now that we have unraveled part of the unsecured credit growth situations, right? Let's look at three different verticals that we have across in our panel today. One is, of course, from credit card perspective itself, how does it look like? Education business. As I introduced Mr. Pathuri to my left as the showstopper, I would invite him to speak about this is strata of the country which still relies on chit funds. He's got a very, very interesting perspective. I'm sure all of you are eager to know about chit funds. We heard it during our childhood days. Is it still there? What's the expansion portfolio? How does it happen? Disclaimer, he's going to wow you with the story today.
Thank you, Mr. Sridhar, and good afternoon all the panelists. I always say to Sridhar when I was part of this group, because I'm a misfit, because I'm nowhere concerned with a startup or nowhere concerned with a bank. I'm from a very, very niche financial instrument what people used to long back, but now that it lose, many people doesn't know about the chit fund. So coming back to my background, I was the Chief General Manager from Union Bank of India, retired. Post-retirement, I took the assignment as the CEO for Margadarsi Chit Funds. So there is no difference between the bank and the chit fund company. Almost a similar type of activity they do, but the lending part is a little bit different from the banking side to the Margadarsi. When I come back, what's Margadarsi? Who is Margadarsi? I think many people doesn't know. Why I'm here also many people doesn't know. So I think many people in the audience may be knowing Priya Pickle. How many of you know? How many people know about the Ramoji Film City? I think many. So many top hit movies, both Bollywood and Tollywood, are being made at the Ramoji Film City. So we are from that group. Mr. Ramoji Rao, the founder, he is the group leader and he is no more. We have a lot of group companies within the Ramoji group, headed by Inadu. It's a Telugu newspaper coming in all the 2 states of Telugu plus across India. We have a e-paper also. Then we have ETV, which is in Telugu, Kannada and Tamil, and we have ETV Bharat across India, and we have Priya Pickles, and now we added a Sabla Foods, Sabla the millets. It's a completely ready-to-eat millet food, and we just 3 months back we have launched it. It's yet to take off. We are doing a little bit of marketing. So that's the background of Margadarsi. How exactly is that? It's a company of more than 62 years old, founded by Mr. Ramoji Rao. And as on date, we have around 120 branches. Our presence is only the southern state like Andhra, Telangana, Karnataka, and Tamil Nadu. Having 120 branches, we do around 10,000 crores plus business turnover every year. And we have around 1,000 plus employees across all the 4 states. Now, I'll tell you why I'm here today is that we are planning to expand our network in the coming days, maybe 200 plus branches, maybe a 25,000 crores of business, what we are planning. So we are trying to expand it to Maharashtra and Orissa. I'm here to showcase myself that I'm coming here and to try to do chit fund business in Maharashtra. That's the reason I am here. When it comes to the company, the traditional instrument is chit fund. Everybody knows it. I think we are regulated entry. Many people are asking me who is regulating the chit fund industry. Each state there is a chit fund act, and along with the government rules. There's a set of rules are there, and it has been totally governed by those chit fund act and the government rules formed in the different states. And somebody was asking what about the RBI guidelines, whether RBI is monitoring. Yes, a little bit of part. RBI can always come and ask us what we are doing, how we are doing. That is also a part of it. So there are a lot of non-traditional chit fund companies runs in each a small village or maybe a small sector like gold loan, jewelry market, or maybe business people, maybe there in the real estate sector. That's a non-traditional. Some 10 people sit, they contribute money, they take, whoever wants money, they will take it every month. But ours is a completely act-driven company and very strong company, very high liquidity company. So nobody lost money in that. And one more thing is we are the highest compliant company. Because I was there in the banking institution, I get back to Margadarsi, when I see the compliance level, what we do is the highest. So we don't compromise at any part of time. That's the business model. Then when it comes to the because we are doing with 124 states, whether we are doing digital transformation or not. I think that's the one question everybody asks. We are doing. Normally the chit fund companies go and collect money manually, books of accounts also maintained manually. But We are having some type of software, but now we are going for the entire digital transformation of the company, right from enrollment to recovery. So we have a partners for almost all the technology. For the core Chit, we have a Finstein company which is from Chennai. We are using LeadSquare for our CRM software. We are using People's Strong for the HRMS and CyberSophie for the cybersecurity. So we are there in the technology part also. That's taking the technology in front. We are trying to expand our network from both Orissa and Maharashtra now, expand our branch network as well as across India growth. And when it comes to unsecured advance, I think I'll complete one go before he asks something. How exactly our unsecured advance will come to the Margadarsi? So we have a model of both the savings and finance. We start with 1 lakh to 1 crore. That's our size of the, but whether you say saving or a finance, it's from 1 lakh to 1 crore. So we do non-traditional way of identifying the people and selecting the people and making the members in our city. But normally when somebody like CRIF or Kotak or somebody, they will do a lot of if and buts when some, even the 10 lakhs of 10,000 of what you say, 70% of the unsecured advance goes to the less than 10,000 with some riders. I think we don't finance less than 1 lakh. We finance minimum 1 lakh, then go up to 1 crore. So they see a lot of things before they actually do the final payment. But we also do it, but we do it in an non-traditional way. We go to a shop. My development officer or market officer go to a shop and see him how he is doing business. And we collect some information of his repayment capacity or maybe a statement of accounts. Maybe we take some income tax returns, also depends on the Chit size. But overall, we depend on his background, how exactly he is doing business, how much money he is generating from the business. Will be able to pay his monthly installments or not. That is the base what we'll do. And my friend Mr. Ram will be annoyed because of me because we don't use the bureau score much. But we are trying to bring the bureau score here for maybe the high ticket advances. But the audience sitting here can use it. Without bureau, the chit fund company Margadarsi can finance you up to 1 crore. And at the same time, why people come to the chit fund, that also I want to tell you. Sorry, Sridhar, I will take a little bit of time. So I don't want to miss the opportunity actually. So you see, people come to the chit fund platform for saving. People will contribute money for 30 months, 40 months or 50 months. And around 8.5% will be their revenue. If nobody wants money within the 50 months. But at the same time, people comes on our platform for the future investments. Somebody is planning to do some business. He wants some margin money of 10 lakhs, 15 lakhs. They will start investing in our company. Whenever they want, they will participate in our bid and auction. They will take money and start the business. Maybe some people are coming for education. They will plan for the education, 40 lakhs, 50 lakhs also chit fund is there. Some people come for the housing. Some people will come for marriages. Most of the, I think around 50% of our portfolio comes from the employees. I think Ram and Sridhar also will be surprised. They all may be thinking why government employees come to the chit fund. Because they have a lot of other ways of taking the unsecured advance. But we have a different model for them. So most of the government employees comes to us because we don't have the bureau score looking at it, and we look at something else on our repayment. That's one part. So I think we have a discussion in the closed doors, how exactly we can take over the housing loans from different financial institutions. They were all surprised because somebody take a housing loan and pay for 20 years, right? 15 years, 20, I think most of them may be having housing loans here. Please shift to our platform. We can get it done in 5 months, 5 years. That's exactly 50 months. You can close down your housing loan within 50 months if you are coming to our platform. Take my number and mail it to me if somebody wants it. That's the way we look at it for helping the people across the country. So it's not that then it comes to the security part. What my colleagues were discussing, what is the security the chit fund company take it. We are very clear that it's all money with the public. We don't have any government backup or a state government or central government backup. We have purely play with the public money. So we want to be very, very safe and secured. So we take a minimum 3 to 5 guarantees depends on the liability what we are going to create on them. Somebody can't give a guarantee. What we'll do is we'll take out the liquid securities. That is called LIC policies or a bank guarantee. I'll take a mortgage also, we'll take it. So that's a claim pay, but security, personal security is a must if they don't give any liquid security. In the personal securities also, we don't take any documentary evidence or take original documents, but we take a documentary evidence for the properties what they are holding. If somebody having 2 crores worth of property, 1 crore worth of property, we'll take the documents, only plain paper documents we take it and keep it with us. So as long as he pays the installments to us, it's an unsecured loan, right? Only when he default, then we go against them for recover that amount, whatever the property details they are given to us, we'll go against them for a attachment before judgment. That's the way we do the recovery. In between, even the customer doesn't pay. Actually, the chit fund, 50 members are there. All the 50 members has to pay every month for paying to one person. Whereas our company is having a very strong liquidity. Even out of 50, 10 are not paying, company will pay the remaining 10 people's share. So that's the strength of our company. Many companies, if the full amount is not collected, the bid amount they pay it in 2 or 3 installments. But our company, we make it a single installment and very fast if all the documents are done. There are occasions we do it within 3 days of TAT. There are occasions we do it in 1 week. Only the information what is flowing from the customer to us, it's delayed, then it's delayed. Otherwise, the TAT is very less than 7 days once somebody participates in the auction.
Yes, sir. Pathuri sir is very persistent. I love he's been on the same trail from day one that we've been discussing. It's a very interesting perspective, right? We as a country are known to be country within many countries. Is also the point to ponder about credit is also seen in very diverse perspectives. You look at it, what is bureau-based could be at about 25.3%. But there is a unsecured market which runs on chit funds. It's a great perspective for us to know more about it, right? While let's switch gears and come back to bureau-based lending on education loans as well as a perspective. I think top 3 households who save money for education, marriage, house, right? Those are the 3 things all of us save money for. But here is Prodigy Finance, my good friend Sonal Kapoor, who goes ahead and lends for various students across. Let's hear from her on that perspective of unsecured lending. How do they see it globally? It will be very nice to have a perspective shared globally as well.
Thank you so much, Sridhar. Nice to be here. Just a disclaimer, the aim is to collect 500 leads for Margadarsi today. So all of you need to sign up. There'll be a paper circulated. So just put in your phone numbers there. And then all of you are receiving calls. And he'll also tell you how to buy a house in 5 months. Correct? Yeah, got it. So please do not miss the chance. It's almost like a chance of a lifetime, right? Student loans can happen forever. It's fine. No, but on a serious note, it's interesting because we talk about unsecured and, we were just talking about banks want to lend to their customers, and then there's a market called student lending where there's nothing called ETC. It has to be NTC. You definitely don't want to give 2 education loans to the same person. So you are entering into a sort of new customer to you, new customer to your entity, and a 24 or a 22-year-old kid looking to take a loan for 50 lakhs to go in a country which is completely far away from India to study master's degree. And that is where the entire horizon of how does the unsecured lending looks like changes completely. You look at the bureau, very young bureau, most of the times, maybe a little bit of a credit card, some buy now pay later, now extinct. And then you keep looking at it and you keep thinking, how the hell am I supposed to underwrite the student? Will he pay back? Will she come back to India? Will she stay in US? And that is where the beauty of how we sort of think of risk and risk and collections together come in a very, very smart way. But the simple answer to that is you start from a place where you look at whatever you can. Where are you going? Where are you coming from? Which course are you going for? What are the chances of you getting a job after you finish your degree and you start lending? The only way you scale lending as a business in education financing is when you keep a hawk eye on the patterns in the portfolio. 500 students from Guntur applying together to the same type of a course, maybe not a great idea. Maybe you need to look deeper. But scattered students across India, different pattern. You need to think about the risk differently. Is the parent looking to co-sign a loan? But obviously the parent cannot guarantee a payment for 50,000 rupees a month. Most likely if they're coming from tier 2, tier 3. Do you take them as a co-signer? Do you take them as a guarantor? can you ensure that the sibling is a guarantor? So the idea is that it's a completely unsecured market, but it is not as random as it sounds when you think of it in the first go. There are so many ways that you can actually look at the patterns. You can look at the profiles. The only thing you need to do is that you need to keep an eye out on how is the current portfolio operating. Continuously look at that current portfolio and find out places where you see there's an opportunity and find out places where there's a gap. And obviously, you know, bureau comes in very handy in that. But again, you have to keep in mind that the risk is the most integral part. You go wrong in underwriting, identifying the student wrong, and the money is just gone because the student is not even going to be in the country where you actually give the loan. The student could be anywhere in the world, right? So it's tricky when you think of it like that. And again, collections become extremely critical to power back the acquisition on any type of unsecured lending. How do you do collections? How do you basically track the network? How do you ensure that the student was actually in the college for which you gave the loan? So some of these bits which actually technically are non-collection strategies, you would think of them as acquisition strategies, but they actually are very handy for collections as well. How do you keep checking in again and again that the student is still enrolled in the college that they took the loan for? How do you ensure that the parent is still staying at the same place from where the student took the loan out? Did the student come back to India or the source country in 1 year, 2 year, 3 years? So these are some of the strategies that you end up deploying. They don't sound very similar to like how you would do it in a bank, but as a fintech or as a startup or as a, you know, one step ahead international financing education company, there is no other way for you to survive, but other than look at some of these ways to actually get the portfolio going for yourselves.
Awesome, Sonal. Yeah. Thank you. So we looked at most of the perspectives of unsecured credit, right? But there are those days on which you have the urge. You want to buy something soon. The plastic in your pocket can do wonders, right? Now slowly that is changing to metal. But how is this changing? We have our esteemed panelist, OneCard founder who manage end-to-end credit card life cycle, right? Shall we look at the role of unsecured credit through the plastic or the metal, right?
Yeah, I think you put it right. It's the metal in the hand, not the plastic.
Yeah.
And interestingly, just to talk about the product, credit card per se does not start as a credit product, right? Meaning, how many of us here have taken a credit card that I would want to pay interest on my credit card? Any of you? Right? None of us would do that, right? It's a convenience product, right? So it starts as a convenience product where you carry it with you either on your wallet or on your mobile, and then you would want to use it for any payments activity. So it becomes then a payments product, right? So from a convenience, it moves into a payments product. After the payments cycle is done, then it becomes a credit product, how the customer would want to choose. So you have a choice in terms of doing that activity. And this uniqueness of credit card as a product, from a payments product to a credit product, really fits in with respect to unsecuredness, right? And the fine balance to play with respect to a credit card is that from the choice for the customer is to choose from it being just a payments product vis-a-vis a credit product, right? We'll have to look at it to say that we can't make it fully credit product. If we make it a fully credit product, then there is a higher risk in terms of collections to it. So there has to be a fine balance to it, right? So what percentage of the customers would revolve, which is not an influenced behavior. You don't influence the customer to revolve on the credit card, right? You would be able to influence usage with respect to an EMI conversion. You shop something and then convert that. That's an influenced behavior. But most part of it is basically a consumer behavior that really goes in. That's really the underlying risk with respect to the product, right? But thanks to the life cycle of a credit card, there's a lot of risk views that can be taken in the case of let's assume a personal loan. Once the disbursal is done, the risk element of that is completely out of the hands of the lender, right? But in the case of a credit card, the lender has control with respect to a line management, a credit limit being increased or decreased for every transaction, whether the transaction could be approved or declined. So there is a lot of controls from a risk point of view with respect to a credit card life cycle. Given the fact that credit cards typically, if you take at it about 10 years back, credit cards purchases, maybe prior to 10 years as well, it was more for discretionary purposes. You would use that for, say a high ticket purchase activity. But what we've really seen in the last 5-6 years, it is becoming more of an essential product, meaning most of your bill payments, your grocery purchases, shopping activity happens in the credit card. So you can really see that there are a couple of trends that has happened in the credit card over the last 5 years is that it has moved more online. So physical versus online, the trend has been more towards online. And two, it is moved towards essentials than discretionary. While a larger portion, I would say essentials would be in upwards of more than 50% of the spends that would happen on a credit card. So it's becoming more of an essential product and a convenience product for the customer to choose, right? And the risk remains in the life cycle fully to be managed.
Awesome. One segment that we can't ignore, which is MSME, when it comes to unsecured growth, right? The 3 points that I spoke about, people borrow for education, marriage, house, they also borrow for business, right? We were discussing about how unsecured growth can be linked to GDP of the country as well, because of the fact that somebody was giving me this fact. How many of you can answer a question on how much does Amazon e-commerce cover in India? The percentage of population Amazon covers in India? Rough numbers, any rough number? 7%? Very accurate, absolutely right. That means there's 93% of the country which is unexplored. So when it comes to unsecured credit as well, it would be very, very similar numbers, right? MSMEs will play a big role. There are some of our esteemed panelists who've gone ahead and done extensive amount of research on MSME, looking at innovating on how do we lend better, how do we lend based on the life cycle of the business rather than a point-in-time balance sheet or a point-in-time business plan. Maybe we'll start with Amit and Ram, you could share, and sir, you could also share some perspectives on MSME itself driving unsecured credit growth in a very secure manner.
Yeah, so Sridhar has rightly said, MSME is a big space in India, and I must say that the government is acting a chief product innovator in the MSME space per se. If you look at even CGTMSE scheme now raised from 10 to 20 crore, or even say Mudra scheme, and Mudra also has various components to it, Shishu, Kishore, Tarun, and now Tarun Plus kind of thing over there. And the product is pretty simple. You just walk into a bank, submit you a few documents, and then take away or walk away with the loan. I think what has happened to the retail individual lending, okay, all the fintech, banks, regulator, and also government came together and they ensured that the entire infrastructure, the ecosystem, and the journeys are so smooth that it's very easy for any individual to take a loan in, say, somebody will say 10 seconds, somebody will say 30 seconds, but it doesn't matter. You can have the money in 1 hour in your bank account. If you are able to replicate a similar kind of infrastructure or journeys or the experience for the MSME set of people over there, I think the MSME space, which essentially if we take the BL as a representative of that, currently every month 60 lakh BLs are getting underwritten. Okay, can it jump to a more than that? Okay, the answer is firm yes to it. But here, currently the government is playing a pivotal role. I think the rest of the stakeholders also has to up their ante and start contributing more positively is my strong opinion on that.
Awesome. Ram, you want to add a few things on MSME segment in India?
So I think I would tend to agree with what Amit's point of view was. So one, there is definitely a lot of thrust from the government, not just a thrust, guarantee schemes to give confidence to the lenders to be able to go and penetrate this segment. 5 years ago, 10 years ago, all of us would have been in the industry. MSME was underwriting was a heavy touch and feel underwriting. You would visit the MSMEs, spend time in the factories, in the trade places, do evaluation, assess the income, which had its own kind of risk, right? But what is happening is this kind of underwriting methods is not equipped for scale. So if you have to scale it, then how do we do this? Because you can't keep replicating it this way. On the other hand, there is a rapid growth of formalization, more people coming into the formal ambit of MSMEs, right? So if you have to match up with the speed, then we need to look at different ways of underwriting these MSMEs. One point that Amit again made was at least the micro segment of the MSMEs. They can be looked at as a new retail. You know, how do we underwrite the micro segment, right? Because about 80% of the market is micro MSMEs in terms of number of units. Right? If you have to reach out to them, it has to be digital, it has to be a little more templated, not completely templated the way it is in retail, but that's when the scale can be achieved. Coincidentally, today we have more reliable sources of cash flows, and people are tending to go for cash flow based lending than balance sheet based lending, right? Which is based on the bank statement. Now with the UPI coming in, so much of transaction that you can see in the bank statement, you can categorize them and assess them, right? GST is another way where you can find a pseudo balance sheet that you can prepare and do it. So I think that thrust is definitely required, because the growth has to be propelled from the micro segment, and there more of digitization, use of models to assess them is very, very critical. From the bureau's perspective, we always insist from CRIF that when you're assessing a business, just don't look at how the individual is performing. You need to get an assessment of how the organization is performing. So we have a rank for how the business is performing, and more often than not we've seen there is a difference in the repayment hierarchical discretion, right? So some of them have a very good personal score, but the business has a very high risk score, and vice versa. So these are certain things that are available to propel the growth of MSMEs. Is what I think.
What Ram didn't tell us is, Amit was telling us that this urbanization is going to grow to 40% from 36% in the next few years. It's the aspirations of the country that can be propelled through access to credit, right? So MSME needs to be definitely being looked at in a separate format, because of the fact that if you go to some of the remote places in Maharashtra, there is Podar schools who's going and acquiring schools, which means to say that education is a big business where educational institutions wants to reach out. And as some of you would have seen on Times of India, there was a nice funnel they brought out about how the divide between urban and rural is changing, and Kerala is almost between urban and rural, it's very, very similar in terms of literacy, access to credit and things like that, right? That is the part that where we got to narrow the divide between the two, right? But I would say that some of the organizations like chit fund companies are today playing a major role, because for them, they have their own underwriting, right? They have their own underwriting. Under the bureau, they operate under the radar, but they have their own underwriting. Maybe I would invite SatyaNarayana sir to speak about what kind of underwriting he does with 2 or 3 guarantors that he takes.
I think I have one question to the
Audience.
entire audience and panelists also. See, there is a lot of trust on MSME financing by Government of India, right? And the second part is they have a lot of government guarantees given to the MSME sector. And there are a lot of Fintech companies, startups who are giving a 30 seconds loan sanction, disbursement of 40 seconds or 50 seconds. Having all these three, why the MSME growth is not happening in India? That is one question to be answered by many people. Not only the Government of India, the banks, financial institutions, NBFCs, and as well as the people who are doing the business of MSME. I think that's a big question to be answered. Unless until that question is been answered, the growth of MSME will be like this only. I'll tell you, being a banker, ex-banker, and I always seen from the other side of the stress in the MSME sector. The MSME sector stress is very, very high in all the public sector banks, including the NBFCs. When the stress increases, banks always put a back foot of doing finance in the MSME. The entire crux of the MSME growth depends on the mindset of the financial institutions. Unless until that threat, they come out from the mindset of the people, now it's very difficult for us to, the way the Government of India looking at the exponential growth in MSME doesn't happen. That's my personal feeling. I don't know, Mr. Sridhar and the panelists sitting on this side will agree with me.
Absolutely.
That's the question to be answered.
Yeah.
Having all these three, why the growth in MSME is not happening? Because the risk of financing MSME, the stress levels in the banking sector, financial sector is very high. So banks and financial institutions also took a back foot. So that's one part of I think I want to talk about. Then when it comes to MSME by Margadarsi, I told you we are unsecured as long as they pay. The moment they don't pay, because we take 3 personal guarantees, we go against those personal guarantees for recovering the amount. And I told you already, because we don't have any government guarantee, we don't have any government backup. It's a purely public money we play with that. So public money has to be handled very, very carefully. The company cannot make money, pay money to the person who is supposed to pay. So that's the reason we have a unsecured, deem it to be unsecured, but actually it's a secured finance. When it's not happening, recovery doesn't happen.
Thank you, sir. We'll end on 2 rapid-fire questions. One to Hari. Billion debit cards in the country, 100 million credit cards. What do you see the growth in the next 2 years to 3 years?
Yeah, in fact, 6 years back when we started onto it, we did see in terms of challenges on form factor, will credit cards die, the plastics will die, right? But we said for sure to say that with the advent of UPI, a lot of meaning it is not just digital, but formal economy coming in place, right? This becomes a means for consumption. So when there is growth, consumption, credit card becomes the line on the consumption. Clearly, of course, meaning in India, when UPI came in and then was growing, initial days there was fear that will debit cards die, right? No, it has not died. The growth has slowed down, but there's as many debit cards which has been in use. So UPI plus debit cards, first step towards credit. ULI on meaning helping on credit on UPI is going to be another step towards that. The form factors will change, but the credit will keep growing because credit is the means that is bridging the gap with respect to the needs and the aspirations, and that will definitely continue.
Perfect. Last question to the lady on my left. How does education business grow over the next 5 years? What's the growth that you see? Any points on risk?
I think the last 3 years, especially after COVID, have been great. I mean, the CAGR in the industry itself is trending 15% plus, right? So it looks like that we are on the right trend, and I don't expect the CAGR to come down anytime soon over the next 5 years. As part of Prodigy, I love the fact that most of the demand is coming from international education, which means students are very excited to step out of India and pursue education abroad. Across fields, could be like even if you want to become a doctor, you think about Kazakhstan, and that's okay. That's how the market is moving. Now it's a questionable thing whether do we like that as Indians or not, or whether that's the right step or not, but the kids definitely are very excited, and so are their parents. So the market looks great as a lender. As an Indian, I still am looking forward to a way where the government is a little bit more focused on building institutions in India so that the kids can actually get the education they want in the country. And ideally, I would love to fund them personally. So let's see how it goes, but the industry is deemed to grow at 15% plus.
Perfect. Thank you. Thanks to the esteemed panelists. I think we've got a well-rounded perspective of unsecured credit growth for an aspirational country like ours, right? Thank you so much. We are over time. Please ask any questions you have to the panelists offline.
Yes, thank you so much. Well, I must say, dynamic speakers, dynamic conversations. That calls for a dynamic round of applause for all our speakers. Thank you so very much. I'm sure you all would have questions, but in the interest of time, I would urge you all to please connect with our speakers offline. And may I now request Vanshika Agarwal, consultant at Digital Fifth, to please join us and felicitate all our speakers with a memento, a token of appreciation, starting from Mr. Amit Pathak, business head, personal loans and consumer finance business, Kotak Bank. Thank you so much, sir. We'd also like to thank Mr. Hari Velayudan, co-founder at OneCard, for sharing your insights with us. Also thanking our moderator, Mr. Sridhar Narayan, Chief Business Officer at Perfios, for weaving that whole conversation for us. So thank you for driving that conversation. A round of applause for him as well. We'd also like to thank Ms. Sonal Kapoor, Chief Commercial Officer, Prodigy Finance, for joining us for this wonderful panel. Next up, thanking Mr. SatyaNarayana Pathuri, Chief Executive Officer, Margadarsi Chit Fund Private Limited. Thank you so very much. And we'd also like to thank Mr. Ramkumar Gunasekaran, Director and Head of Sales at CRIF Highmark. I would urge all of you all to please step forward for a group picture. It's time we get your click together. Thank you so very much one more time for sharing those very, very important and key insights when it comes to strategies for expanding access to underserved populations, managing risk of credit, of excess credit, and of course ensuring regulatory compliance as well. Thank you one more time.